Hello, and welcome to the Maple Brown Abbott 2026 Outlook Series. My name is Dean McLelland, and with me today I have Phillip Hudak, Co-Portfolio Manager of the Maple Brown Abbott Australian Small Companies Fund. Welcome, Phillip. Thanks for joining us.
Great to be here.
So 2025 was finally the year for Australian small caps. What are the drivers for that to continue in calendar year 2026?
2025 has been a strong year for Australian small caps. The smaller end of the market returned approximately 20%, which is double the return that we saw at the larger end of the market. And the key driver of that there has been a more favourable macro environment with 3 interest rate reductions. While those tailwinds are subsiding into 2026, we actually expect to see earnings delivery starting to come through more materially at the smaller end of the market. First of all, we expect to see a broadening out of that earnings delivery across a wider range of stocks at the smaller end of the market. And then secondly, comparing that to large caps, the market expectations is that the smaller end of the market will deliver higher returns over 2026 and even into 2027, which is a favourable environment at the smaller end of the market. And then finally, looking at where we are in the investment cycle and looking at previous cycles in the small cap end of the market, the magnitude as well as the duration of this upswing that we're seeing currently does show signs of legs to continue. So overall, in 2026, we remain constructive at the smaller end of the market.
The smaller end of the Australian market has seen a real resources renaissance in 2025. Are there factors there to continue to drive this commodities bull market? And how are you within the fund sort of best positioned to play this?
Yeah, look, 2025 has been what I would say is a stellar year for small resources, returning approximately 60% over the 2025 calendar year. And that's almost double the return that you saw for the larger end of the resources market. The key driver of that there has been the representation of gold miners within that smaller end of the market, representing about half of that total exposure. The gold price in US dollars has gone up roughly 60%, while many of the small miners have significant operating leverage, which has actually seen material share prices increase as well in excess of what we've seen with the gold price appreciation. Some of the key holdings we've had in the portfolio and continue to have is Genesis Minerals, continue to actually see upside to production and cost estimates versus market expectations. And at the smaller end of the market, Mika Metals, where we see upside to both the grade and production ramp up coming through there. Going forward into 2026, we do see a favourable environment for commodities coming through. First of all is the expectations of lower US interest rates. Hopefully that leads to a lower US dollar, and that is typically positive for commodities. On top of that, we're seeing the re-industrialisation around Western nations there that should be positive for commodity demand. So in 2026, we expect that broadening out from the exceptional performance we saw in gold into other commodities. Some great examples include copper, which is exposed to the electrification and energy transition, with Marimaca being a key holding in our fund. Also, we believe that we are going through a nuclear renaissance where we're actually seeing strong demand from Western nations, strong demand from China in their nuclear rollouts. And then on top of that, there is lithium, which is now starting to see a resurgence. It actually has gone through a period of oversupply, but that demand-supply imbalance looks to actually be coming into match a lot quicker than market expectations, given the strong demand from China with electric vehicles. But more surprisingly has been the energy storage demand coming through from the demand from renewables.
What are the key sectors and stocks that you see providing the most upside potential at the smaller end of the Aussie equity market for 2026?
I'll focus on 2 key areas where we see opportunities. Is first of all, those companies that are in the improving fundamentals of the earnings life cycle. One of the key holdings is Iris. Over the last couple of years has actually gone through a divestment program where they've actually removed a number of their non-core assets. There's a new CEO in place with significant pedigree in relation to driving cost efficiencies, investing in product development, driving the top line, and that flowing through to bottom line profitability where we see upside. And then finally, in the second area, is looking at those companies that are exposed to both government and resources spend, be it asset management spend, be it capital investment, or even those linked to mining production. There is a strong demand profile of government projects across transport, water and renewables. If you look at the contractors that are exposed to that area of the market, we're starting to see significant growth in their work in hand order books. The contracting environment is a lot more favourable than what it's historically been. Free cash flow coming through for these companies, strong balance sheets and the ability to do EPS accretive acquisitions. And so some of the key holdings we have in our portfolio include SRG Global as well as McMahon Holdings.
Thanks very much for your insights today, Philip.
Thanks, Dean.
If you'd like to hear more about the Maple Brown Abbott Australian Small Companies Fund, please visit our website.